Dheeraj, are you speaking on mute?
Okay, sorry. As I was saying, the value of equity was 83 lakh 33,333. We divided it by 2 lakh of number of equity shares that came to market price of 41.67. We had EPS of 5 rupees per share. We divided it by the cost of equity of 12%. That came to also the market price per share of 41.67. Now, both of these things are not different. Both these things are same if you look into the value of equity for a bit. How did we calculate value of equity? We did net income divided by cost of equity, isn't it?
Yes.
Right?
Yeah.
Net income divided by cost of equity. Now, if you look at this and look at it in this way, net income, if you put cost of equity here, and then you have one more 1 divided by, I would say, multiplied by 1 divided by number of shares. So just divide the net income by number of shares. What do you get? Divide the net income by number of shares. What do you get?
Earning per share.
Earning per share. And you are left with what? Earning per share divided by cost of equity, isn't it?
Right, right.
So both are same only. It's just the other way around doing. That's all. Everybody got the derivation, no?
Yeah, got it.
Yeah.
Yeah, great. Now, why I told this, because one of you were asking, no, what is the relevance of this? What do you call it? Number of shares. Sorry. Yeah. So, what is the relevance of EPS here? So, through EPS also you can calculate the market value of share, and this is the way of doing it. Two ways you can do either way. That's all right. Now, on the basis of these three informations, WACC you have calculated, the value of firm you have calculated, the market price per share you have calculated. You will take the call which capital structure is better. Yeah. Now, please go ahead and calculate this for the rest of the four scenarios, cases. Those are these ones. Take your time. It's all right. Do it in your hand. I thought of calculating one more question, but I don't think we'll be able to. Just complete this and we'll be done for the day. Yeah.
So Dirja, in this, it like what Ashwadeep said earlier. So 15% of 1 crore,
Yes.
15 lakhs, and then 8% of that, that
Yes.
will be your interest, and then you
Interest.
continue the same thing, right?
Perfect. Perfect. Yes. That's the way.
Okay.
Dheeraj, for the second one, is the value of firm 86.76?
86.76 is, give me 1 second. Wait. 86.76 we have. Give me 1 second, no?
I might have made a mistake also.
I've actually not
Or should I
calculated.
compare price per share?
No problem. I'll tell. Give me 1 second. I've actually not calculated. I'll just simply calculate right away. Give me 1 minute.
Okay. Okay. Sure.
Interest. What is the value again you told?
86.76.
86.38 should be the answer.
Oh.
What is your value of equity?
Equity is 18.8 and
Mm, no,
before
no,
tax.
no. Value of equity. I'm saying value of.
Oh, okay. It is 11.28.
No, that is your PAT. That is your net income. I'm asking value of equity.
All right. I'm getting confused.
No
Sorry.
problem. No problem. No problem. Have you written those
Uh,
descriptions next to your values? Just have a practice of writing that. Huh? Otherwise, you get confused a lot.
Yes, but I got confused which one to call equity. So I first calculated the debt by
Okay.
multiplying the debt percent by asset. So that has come to 15 lakhs.
Perfect.
Now after that EBT is 88% of 15 lakhs, which is 1.2 lakhs.
Mm-hmm.
Uh, so then
You said this is
I have
EBT. This is interest, huh? This is not EBT.
oh
Yeah, yeah. You're calculating interest.
interest. So
Yeah, yeah.
deducting interest from debt, I have
No, no, not debt, not debt,
18.8
not debt. EBIT.
uh,
EBIT.
EBIT.
Yeah, deducting
Yes,
from
yes.
EBIT. Yeah.
Uh, so EBIT minus interest is
Comes
18.8,
18.8
and then
is EBT, huh? Or PBT,
hmm,
profit before tax. Give me one.
okay.
Huh? Yeah, go ahead. EBT.
Then after tax, it is 60% of 18.8.
Yeah,
That is 11.28.
that is perfect. That is your net income, basically. Yes.
Yeah. Then value of firm 11.28 by 13%.
Value of firm is 11.28 by 13%. You made one mistake here. Um, you have missed out something else. I have uh, I have given you that.
Preference shares.
Yes, yes. You forgot to deduct that.
Oh.
Yes.
Mhm.
So value is coming to 71 lakhs 38,461. Is it
Val-
correct, Dirja?
Value of equity, no?
Yeah,
That is correct.
value of equity.
71, 38, 462.
71, 38, 4, yeah, 461 I got it.
Yeah, yeah.
So then EPS is 5.45.
That is correct. Yes. And how do you calculate the what do you call it? Market price per share?
Market. Yeah, 1 minute, I'll just do it.
Yeah, yeah. Go ahead.
So 9.58 is it after deducting the preference shares?
9.28. It should be 9.28.
So that's 41.99 Dirja market price.
41.99 is the correct answer. Move to the next scenario, please. Okay. Nine. You said 90, 91 point something, right?
9.58 I got.
9.5.
11.28 minus 1.7 lakhs, right?
1.7. Why 1.7?
The preference shares are uh,
That is your
two.
number of equity shares. Your preference shares.
Yes.
You're not. You will
2
not.
lakhs.
Yes, that is your preference dividend. You have to deduct preference dividend, not shares, right? So preference dividend is
Right.
2 lakhs, like you said,
So
and
it is 9.28
perfect,
by
perfect,
13%.
perfect. That gives you
Yeah.
what? Value of equity is
Uh, yeah, value of equity is 300. No. 13% is 71.384.
perfect, perfect. So now your
Okay, so this divided by 1.7 if I do, then I should get 41.99 as price per share.
perfect, perfect. Yeah, that's the thing that we'll calculate. Do the same thing for the rest of the three scenarios.
Okay. Thank you so much.
Dheeraj, I am stuck actually. Um,
Where?
so here I have found out for the second question, debt value is 1.2 lakh.
Debt
So
value is 1.2
after
lakhs or the interest is 1.2 lakhs?
interest is 1.2 lakhs. Yeah. So we have to deduct that from EBIT, right?
Yes, correct.
It is 18.8
80.
lakh. That is net income.
That is your, no, not in net income. You still have to deduct the tax. So this is EBT or PBT, profit before tax.
Oh, tax is also there. Okay,
Yeah,
okay,
yeah,
okay.
yeah.
That's why I got everything wrong. Okay.
Go ahead. Yeah, I think Sami is here. Sami, hi. I'm not sure. Have you tried this question? I had given this the last time, no?
This question, I'm not sure. I need to check the Excel sheet. I'm
Okay.
still like stick to Excel sheet.
Okay. Slightly tricky it was. So you'll have to probably refer the videos. This question was slightly tricky. It's not, I cannot just repeat it in 2 minutes. So
No,
just
no,
refer to the
I'll go
videos.
through.
Yeah. Mhm.
I'll go. So when we are starting leverages, evening, right?
Leverages, I thought of completing this today, but I'm not sure if I can. We are left with one more small concept of MM approach. I'm saying small because it is not relevant to us, but it is a big concept. If we can finish that off, then today evening I can start off with leverages. If not, then I'll take the today's evening also for capital structure, and the next weekend we'll start with the leverages.
No.
That's what is the
The
plan.
thing is, I was checking because we are getting into a June month, so we are getting closer to.
I know, I know.
So
I also
like,
have to spend some time in for the other subjects, so I want to get done with this also. But then again, I should not rush it also. What is the meaning of rushing it if nobody is catching up? So I'm going in you guys' speed. Wherever you are having doubts, also I'm stopping right then and there, and I'm pausing it. So we will see. I think we should be done. I think by looking at their speed, I think they'll be able to complete the rest of the three scenarios. We have easily 15 or 20 minutes. So I can quickly finish off the MM approach, and by evening we can start with the averages.
yeah, sure. So that we can revise it once again.
Yeah.
We have time.
Just like last time, we'll be practicing a lot. So there'll be different calls where I'll give the questions. You guys can practice and tell me the answers. I'll jumble the questions, in different chapters, so that we take care of that also.
Correct. Also, you remember like we discussed like can we focus on midterm syllabus also?
Yes,
We are not sure,
yes.
right?
Yeah,
Because
that's what I'm still waiting, because it's not yet clear now. Let somebody clarify, or let us get the schedule at least. Or if we don't get anything, I'll give a call to Shar. I have not talked to him in a long time, so I'll ask him point blank, whether full or partial, or is it different for Vibus and the exam, or how is it? Let us get that clarity, then only we'll take that up.
no, thing is anyhow we have to prepare full syllabus because for Viva it is not post medicine. It's always like full syllabus.
That's what we are not sure of, no? I
No,
mean,
no, that's confirmed, right? That's what even sir said. I told you yesterday, right? Time value, money, like all these terms are into before midterm, right? So it
okay.
includes
I
like full
did
syllabus.
not I did not catch that then yesterday. If that's the case, then either we will have to at least discuss the theories for the Vibus purpose.
Correct,
Um,
correct.
but the problems we'll have to see. Okay.
Problems, I don't think so. He's going to ask anything from midterm, but definitely theory he'll be like asking questions from midterm.
No, problems when I say I'm saying from the exam point of view. So the exam one.
Yeah, even I am like referring the same thing. There might be not like any questions before like midterm, like in end
So
semester.
that might be is not sure. No, we need more clarity. Yeah.
Yes, that's true. But
Because
we are short of
yeah.
questions, right?
Yeah, if I have to invest time in that, easily 2 3 different discussions will go in that. So
Correct.
and the time value of money, I think everybody must
Mm,
have forgotten already those tables.
absolutely.
So what do you say,
PBIF, PBIF, then FPIF.
yeah, if we have to invest time, let's be very sure that it is going to be there in the exam, then only we will. So I'm just waiting, but the Vibus part I'll cover. The basic concepts part we can discuss, and we'll get done with it, no problem.
Yeah. Also, like we were checking with. Can we just pause this record?
Give me 1 second. So did anybody get the answer for the third one?
Yeah, the result it's
Value.
5.98.
5.98 is the correct. no, what is the value of share?
Market price is 42.75
That is correct. That is correct.
and 5.98 is EPS.
5.98 is the EPS. That is correct.
Fourth one is 38.4 and 6.14.
38.4 and 6.14 is the correct answer. Yes.
Last one is 28.75, 5.75.
Perfect. Great. Which one is better than?
So it will be highest EPS, right?
Highest EPS. If you go, there is a problem. If you just tell me which one is the highest EPS.
Highest EPS is debt ratio 45%.
Debt ratio 45%, and the EPS comes to 6.15, right? 14 or
6.14. Yeah, 114. Yeah.
Now, can you tell me in that same scenario what is the market price of share?
Same, it's 38.4.
Can you look at it if any other market price is higher than it?
Yeah, the third one is higher. That's 40. The first, second, and third is higher than this.
Yes. So that's the call you have to take. If you have EPS higher in one and your market price is higher in another, which one is better?
I mean, it's a bit confusing here. Can you please repeat it?
Yeah, sure. If you have EPS higher in one scenario, however, market price is higher in another scenario, which one is better?
EPS higher is better, no?
No. Market price holds precedence in any case. So in any investment related decision, no, EPS is the highest one. EPS is important. I'm not saying it is not important. And we have taken decision on the basis of EPS in the last few questions. But where you are able to calculate the market price per share, it has a relevance. It takes precedence over everything else. Market price is the best one. So you always look at the market price per share, or you can market price per share is nothing but your value of shares, value of the firm. Okay. You can also look at the value of the firm.
Okay.
So you are saying, Dheeraj, like if market price is more than, if it is more than EPS value, then you have to pick market price.
No. That is incorrect. So I'm saying you compare market price of 2-3 scenarios. You compare EPS of 2-3 scenarios. Those 2-3 scenarios. So your market price will be higher for highest in one scenario, right?
Okay, among three. Okay.
Not necessarily that same scenario will have highest EPS.
Correct.
So which one takes precedence? Market price. Always. You always take the decision on the basis of market price, not the EPS.
Irrespective if it is less also.
Irrespective of it is less. Yes. Irrespective of it less.
Compared to EPS. Compared
Yes.
to EPS.
Yeah. The reason is, the logic is, the individual stock holder is getting more money from it, more value from it. No matter how much is the EPS, but he's getting more money for the same amount of money invested in the company. So that takes precedence over everything else.
Okay. Just for my understanding, let's assume like, sorry, Josh, go ahead.
No, Sammy, go ahead. No issues. I had a doubt.
Just for my understanding, let's assume my market price for product A, B, C is 15%, 16%, 17%.
Market price cannot be percentage, no?
Okay. Let's assume it's a share value.
Okay.
In percent. Okay.
Share value percentage.
Just for understanding, you can take it as a dollar also.
Okay. 15, 16, 17, right?
17. ABC.
Okay.
And my EPS for ABC is like 16, 15, 14.
16, 14 and 14.
16, 15, 14.
15 and 14.
Other way.
Okay.
Yeah, 16, other way around. Okay. So my market price for product C is higher.
Yeah.
Right?
Yeah.
But my EPS is lower.
Correct.
So I have to pick product C because market price is good among these three products.
That is correct. That is absolutely correct. Yes.
Oh,
it's exactly what I was saying. Yes.
Thanks.
Dheeraj, Shruti here. Sorry, who was talking? Sorry, please go on.
No issue. Actually, you clarify your doubt. No issue.
Okay. For some reason, I'm not able to connect to the concept today. Where is the firm we used to calculate by EBIT by WACC, right?
Correct.
So for the first question, EBIT is 20 lakh and WACC we got 12%. So total assets is 1 crore and we got the value of firm as 83 lakhs 33,000.
Yes.
So how did we get that? We are deducted from the total assets the value, right?
So I'll tell you one logic here. This question is slightly different from the other questions. In other questions, what happened was tax was not there. Am I right?
Yeah, right.
Preference dividend was not there. Am I right?
Yeah, right.
Which is why value of the firm we were able to calculate by simply dividing EBIT divided by the overall cost of capital. The reason is, if you remember, overall cost of capital, there were two formulas, two methods. In one method, we were multiplying the share, that is 0.1, 0.2, into the cost of that particular thing, and we're adding those multiples. Do you remember that? We're calculating a small table. Yeah?
No, Tirit, sorry.
No problem, no problem. Yeah, that's actually a good point. I missed to mention it. Good thing that you brought it up. Let me just quickly tell you. So here it is. Now, if you remember, suppose we had 100 equity shares, 200 of debt. Equity, this is debt. And we had to calculate a total of it, this plus this.
Yeah.
We were calculating ratio of the first one, this divided by
Correct.
this, and this divided by this. Yeah. Then suppose cost of equity was 10% and this was suppose 15%. So we're multiplying this and then multiplying this. Yeah. And we're totaling these two to calculate the overall cost of capital. Does that make sense?
I'm not able to connect. I don't know what I'm missing today.
No problem. No problem. So the WACC had one of the methods like this. Another method I think you will be able to relate. We were multiplying 100 with 10%. We were multiplying 200 with 15%. We were totaling both. We were dividing 40 by the total, that is 300.
Yeah, right.
Yeah. So the first one, so we can choose any of those methods. So you are doing by the second method, which is why you have forgotten a little bit about the first method. That's all right. You don't have to remember really. However, now relate this to net income, WACC. Okay. Now earlier what we had was EBIT. Suppose this is one value. We were deducting interest. This is another value. We were calculating net income. Yeah. Because nothing else was there.
Yeah, correct.
Nothing else was there. Now, suppose you had along with it your what do you call it? Total of or value of the firm. Value of firm, which is nothing but your equity plus debt. Right? Equity plus debt. Now you divide this EBIT by the value of the firm, you will be able to calculate the WACC. That's exactly what you just said. Yeah.
Yeah, correct.
How was that working? That was working because we were following this method only. This method. How we were following this method, if you look at it, this 10 is nothing but your net income, 30 is nothing but your interest. This 10 is nothing but your net income, 30 is nothing but your interest. You add the interest and net income, you get what? EBIT. EBIT comes to 40. However, let me bring slight attention here. If there would have been tax, now if you deduct tax and calculate the net income, now imagine in this scenario, if you add net income and interest, will you get EBIT?
No.
No, right? So scenario changes when the tax comes into picture. I forgot to mention this in the beginning. So you cannot use this method.
Okay.
Are you getting my point? So you have to go by the original WACC calculation method.
Okay. But WCC will be same, right? Even if we...
the first scenario will be same. Yeah. First scenario it will be same. The second scenario is different, not the cost of equity. So
Second scenario, yeah, cost of equity will change because of the tax.
yes, yes, yes.
I mean, yeah, value.
And
Okay.
when you say WACC will be same, do you mean between this and this?
Um, No, I was telling, however, we will calculate for the first scenario, WCC will remain the
Yes,
same.
yes, yes, exactly.
It will,
Yes,
yeah, 12%.
yes, yes.
So, EBIT we have already given in the question.
Correct.
So, for calculating, we have to deduct it from the total assets, is it? Or we have to add 40% into it? How did you get the value of the firm? What is the right method to calculate?
Okay. The value of the firm you can simply calculate by thinking this. Now that you don't have equity, that means value of now that you don't have debt, your value of equity
Yeah,
must be equal to value of the firm, isn't it?
yeah, right.
Now you don't have debt, so your value of equity must be equal to value of firm. Now calculate the value of equity for the time being. How do we calculate value of the equity? We simply do
Net income
divided by
divided by
cost of
equity.
equity. Now your value of equity will come to 83.33 lakhs.
Okay.
When you do 10 lakhs divided by 12%. Makes sense?
Yeah, right.
So that is your value of the firm only. That is your,
Value of the firm 83 lakhs 33,000, right?
yes, that is correct.
Still, I'm confused.
No problem, no problem. Where exactly do you think your confusion is there?
And so, value of firm, if we are going by the EBIT by WACC method only, how will we calculate without calculating cost of equity?
We cannot calculate. That's what I'm saying. We
Okay.
cannot calculate by doing EBIT divided by cost of equity. That's why I told no. So because the scenario is changing, because tax is coming into picture, we cannot use that method.
Okay. So you have gone through cost of equity. I had calculated by EBIT by WACC, and I thought I have to deduct it from 1 crore because it has given us value of assets.
No. We
That's
cannot
how I got.
calculate only. We cannot even calculate. The reason is earlier it used to work because 30 and 10 were the only things that we had in after the EBIT. After EBIT, in this case, if you imagine, in this small example, your EBIT would have been, can you tell how much? 40. Your interest would have been how much? 30. Your net income would have been 10. Makes sense?
Yeah, right.
So when you do 30 plus 10, you are ultimately calculating 40 here. You're dividing this 30 by 300. Now this used to work because there was nothing in between. So when you were taking EBIT, you are actually following the second method of calculation of WACC. Here you cannot do that because EBIT is not exactly equal to net income plus interest. EBIT is something different.
Yeah.
That's
Got
why
it.
you cannot use that method.
So we have to calculate debt, value of debt and cost of, value of equity, and then add it.
Yes.
That's
In the
only
normal way. Calculate the ratio and calculate the WACC. In this question, I would recommend if you want to ignore the calculation of WACC and the value of the firm, that is also fine. Reason is you are calculating the price per share. Price per share is the ultimate indicator of a decision. Okay, so you can avoid those two also. If you are calculating, that's well and good. It's actually very impressive. Teacher, when looks at the answer paper and sees everything calculated, that gives him an ultimate level of satisfaction. Student knows everything. But if you want to avoid that, you can avoid that also. Because as I said, price of the share takes precedence over everything else.
okay.
You can go by that.
Yeah.
Dheeraj, I have a doubt here.
Yes, please.
So you told the highest market price, and for the highest market price, the value of the firm will be maximum, no?
Yeah.
No, but then in this problem which we solved,
Mm-hmm.
so for the third scenario when debt was 30%, the market price was 42.75.
Okay.
But then the value of the firm is 59 lakhs 85,714 for this.
Give me 1 second. Let me just quickly calculate. Value of the firm for the which scenario you said? Third one, right?
Third one, 30%.
And third one, how much you told?
The value of the firm was 59 lakh
No,
85,000.
that is incorrect. You have only taken the equity. Add debt also to that. Add debt also.
Okay. Yeah, fine.
Value of the firm, no? Total.
Yeah.
You have those 4 numbers here, right in front of you. I have taken it.
Yeah,
This one is higher.
fine.
Yeah.
Okay. Yeah, Dheeraj, I got confused.
Yeah. No problem. Yeah. Any other doubts, guys?
Dheeraj, towards the end, what you mentioned, how to determine which is the best option by when the market price varies differently from the earning per share. Can you please repeat that?
Your voice is breaking a little bit, Anessa.
I was mentioning towards the you were explaining something to Sami last. Can you please repeat that? I mean, how we determine which is the best decision if the market price is different from the earning per share.
Let me just give you all the information here. Okay, you have EPS of 5 here, 5.46 here, 5.99 here, 6.15 here, 5.8 here. It was in fact there right next to these. Okay, now look at these 5 scenarios. You have the market price and you have the equity earning per share also. Which one do you think is better? If you look at the earning per share alone, which one seems to be better?
6.15.
6.15. For the 6.15, how much is the price per share?
The lowest. Sorry, no.
38.41, which is actually lower than the first 3, right?
Right.
So that's where we were discussing, which one is important? Which one should be given more priority? Price per share or the earning per share? That's what I was saying. Price per share is always takes precedence over everything else.
Okay.
Price per share is the most important one, basically, I'm saying. So you take the highest price per share, that is 42.46 is your price per share. And that is in fact giving you the highest value of the firm also, which is 89 lakhs 85,000.
Right.
Yeah.
Okay. So highest price per share.
Anvesha, one more thing, you may just use like half mark for this because this is just helpful during the analysis, like when you're writing the conclusion, right? So whether it is 6.15 or 42.76.
Okay, Sami, thank you for the motivation.
Yeah. Any other doubts, guys?
No, Dheeraj, I think it's clear.
Ashwati, have you calculated for all the scenarios?
No, I am still calculating. I'll do that. If I have any doubts, I'll ping you.
Sure. That's perfect. That works. I'll share the Excel sheet either way. You can verify your answers with this. As you can see, it's in the A. This question starts from A to 81 cell, so you can remember that and compare it with this question. No problem. Now, let me just quickly move to the approach. So yesterday we discussed about net income approach and net operating income approach. Can somebody remind me what it was, the essence of both the things? Now I'll help you out in showing you this table that we had yesterday. Give me 1 second. Here it is. This is the table that we had. If you're able to remember, can somebody tell me the essence of net income approach and net operating income approach?
So if the debt remains the same and the value of the firm remains is changing, then the equity must have also changed. This is how I remember.
And this is which approach?
Net income.
Net income.
Net income.
Okay. Net operating income.
And operating income is if the value of the firm remains the same, then the debt must have also changed along with to counter the effect of equity.
No, you are actually confusing it, and that is incorrect. The way you are.
Okay.
No problem. It's okay. This is the second time only we are discussing about it. Anybody else want to try?
So in net income approach, the value of debt and value of equity is the same. is constant,
Value of
and the
debt and
rest
value of
two,
equity, you're saying?
yeah.
Incorrect. Can you try for net
Okay.
operating income approach?
So here the value of debt and value of equity is different, but uh, the overall rate and the value of the firm is constant.
Mm, you're saying value of debt and value of equity is different. However,
Is different, and
overall firm overall cost is the same.
it's constant.
Partially incorrect. Yeah. Anybody else wants to try?
Equity. The major difference what I see is that equity of capital ratio is the major difference. It is not constant in case of NOI, but it is constant in case of NI, net income.
Okay, that is absolutely correct. But you are hiding a lot of other information. I want you to elaborate. What is the difference
Okay.
between these two, the things that you just said? When let me
Okay.
ask you a more specific question. When the cost of
Mhm.
equity is same, you said one of the scenarios is same, one of the scenarios is different. No, I'm
Correct.
saying if the cost of equity is same, what is happening in that scenario? Can you tell a little bit later more?
If cost of equity is same, it's KE, right?
Yeah.
Okay. If KE is same, then your KO and V, I'm not sure what exactly it means, but that is getting changed.
Okay.
Okay. It's not same. It's keep on varying based
When
on
are they
the
changing?
value.
When are they changing? What is changing because of which these things are changing?
KO and V, I'm not sure what the factor
No, I
to
got
change.
it.
KO, I
K
think.
one V are changing, but I'm asking for the reason for them to change. It won't change just something, nothing happened and it changed, right? Something is changing
Mhm.
because of which the K1 V are changing, right?
Right, right.
Yeah. Why are they changing?
Why they are changing? KO means it's a capitalization rate, right?
That is overall cost of capital.
Mhm. Capitalization rate changes
We have less
when.
than 1 minute. Just join back. I'll take 5-10 minutes. We'll finish off the
Sure,
capital structure, the theory part
sure,
specifically. Yeah.
sure, sure.
Go ahead.
Really, I'm not getting it.
No problem. No